And welcome to the Halftime Report. I'm Scott Wapner. Our top trade this hour, rally on. Stocks are surging again. The tax plan nears the finish line with Dow 25,000 within reach. How high can the major averages really climb? With us for the hour today, Joe Terranova, Josh Brown, Pete Najarian. CNBC's Jim Cramer is with us. He, of course, the host of Mad Money. And also here with us on set today is Mike Francesa. He's the legendary radio host. It's great to have you here.
My pleasure to be here, guys. I should be getting ready for a show just about now, but it's a thrill to be here. It really is. I watch you guys every day, as I've said for years and years, as a guy who likes to dabble in this stuff, but I watch you experts all the time and yell at the screen and everything else. Especially a Cramer.
I was going to say thank you for spending the first day of the rest of your life with us.
Look, I've been looking forward to it for months, so it's a pleasure to be here.
You love sports, but you really like the market. I mean, you're really into stocks.
I have been. I had a guy who used to handle all my stuff, but now I do a lot of it myself and learn a lot by watching you guys. And I watch religiously. I watch at 7 o'clock in the morning. I watch him when he first comes on, and then I watch you guys at 12 when I was getting ready for the show. Every day I watch you guys.
Well, we certainly appreciate that. It is great to have you.
My pleasure.
So Jimmy, Mike wants to know, everybody watching wants to know, as we hit new records across the board again today, another 200-point game. We're a little bit off that. How high can we go?
Well, look, I look at this market as, again, from the bottom up, and we get these earnings that bump. And I am sitting here putting together a list of companies whose earnings get bumped by tax reform. I'm telling you guys, you can't just have an analyst come out raising numbers. So the answer is substantially higher, because the amount of stock from the companies that you can raise numbers for, and we're talking about companies that have been buying back stock for years, a 3M, okay?
Yes.
You know, you can imagine there's no supply of a Honeywell. There's no supply of a Caterpillar. So the answer is the industrials themselves, Scotty, much higher.
Look, the industrials, I mean, the transports today, new high, all-time high, first time since December 4th. Retail.
First time, but long time for the transports.
Yeah, first time, long time.
Very nice.
That's clever. You've been waiting to say
Sorry.
that.
Sorry. I love you too much to not have that be my first goal.
Long time first.
I know. Well, I can't do that. I got to do first time.
The point you've made, Jimmy, on the air, and the point you're making again, is that numbers aren't high enough.
Exactly. Right? And that's, look, we still trade on earnings estimates. You know, let's say you got a wood products company, a chemical company, a domestic. I mean, I've been doing some work on waste management. I really like that. Domestic company, tax rate way too high. Next thing you know, you got a $92 stock, and people are saying, why didn't I buy it at 86? And the answer was because they didn't buy it at 76. And that's a pretty crummy reason why not to pull the trigger.
Pete?
Yeah, well, I agree with Jimmy. I mean, first of all, we heard so many people talk about the idea that this is all priced in. Tax reform is completely priced in, and meanwhile, we're up another 3,000 or 4,000 points.
I think it's hard to tell because the market had gone up so much and continued to go up.
Maybe so, but we know the facts and we know the fundamentals. We know the earnings have been strong. We know we've seen that growing, and we also know that but it was still an if, and it's still, quite frankly, an if, although it's getting a lot closer finally. But if Home Depot's paying 35% and suddenly it goes to 21%, how does that look for Home Depot? How does it look for some of these companies that are paying 30+% and it goes down to 21, Scott? I mean, we already have the fundamental story. It's there. If you can compete and you're anywhere in the retail world, if you can compete online and you've got growth and you see what's going on around you and you're smart enough to be able to navigate it, that's a win.
Yeah, Josh, I'm sure we all have people. I know I've had people ask me, where do you think the market can go from here? It's hard to not be in the camp of Cramer and Najarian, just given how the thing looks right now.
Well, it's interesting. It's interesting. We take two different paths to get there, but we arrive in the same place. I'm not a bottoms up. I'm a top down. And what I'm really looking for is confirmation. When you see the S&P have an amazing year in 2015, 2016, the rest of the world kind of lagging behind, you say to yourself, this might be a little bit tenuous. But then when you see the breadth of the market beneath the surface pick up, and to Cramer's point, look, we can't even fill the Wilshire 5,000 with stocks anymore. We have like 3,600 publicly traded companies.
I know.
And there is more demand than there is supply.
Stock shortage, man.
And what are corporations doing in response? Goldman Sachs says the S&P 500 companies are going to buy another $500 billion worth of their own shares next year, adding 2% to earnings. So corporations competing with people, competing with pension funds to own the same asset. And the earnings growth is obviously an important part of the story, but multiple growth is happening as well. And I think partially explained by, and I know this sounds ridiculous, there is a shortage of stocks. Contrast this with the big rally we had at the turn of the century. We had the opposite of a shortage of stocks. we had 700 IPOs in a year, swamping the demand. The ducks were quacking, and the investment bank said, well, let's feed the ducks. That is not taking place now. In fact, it's the opposite. Combined with the global recovery, all-country world index hitting a new high today as well, so along with the S&P.
What I hear Josh sort of saying, Joe, is it's almost pointless to have a debate between whether you should be in small caps versus large caps. The way the market is acting now and the way it could act in the months ahead, just be in the S&P. And a lot of other areas. Don't get so granular and do I need to own small caps because they're going to get a bigger bump from the tax plan, or large caps because big companies are going to pay less in corporate taxes, and that's going to filter down to their stock prices, whether they put money to work in capital investment or they buy back their own shares.
Well, listen, all boats probably will rise in this environment, and I agree right now. I agree with everything that everyone said, and to me, the markets right now are the greatest potential to go parabolic. And I think that's the beginning of what's about to happen. But I still believe in selecting stocks. Pete and I have been talking about financials over the last couple of weeks, and I think that's where a tremendous opportunity is right now, is in the financials themselves, in some of the value plays that are coming back. Josh talks all the time about the Russell. Look at the move the Russell has had over the last 3 days. It's been absolutely incredible. And there's been, and I think, Jim, you pointed this out this morning, a lot of the losing names out of nowhere at the end of December, they're back in favor. Everyone wants the losing names. And the last thing is, did we price in yet the infrastructure bill? Because that's going to be the conversation in January.
Oh, people will say it is. We'll hear it.
Let's turn the tables. 30 years, you sit there, you take questions from people. The floor is yours. I mean, I'm sure you want to know things about markets or stocks.
I have two big questions. Okay, number one, this is the one I think everyone wants you guys to answer, and that is, everyone's made money this year. No matter who it is, unless you're a total dummy, you've made money. Even I've made money this year. So the question is, everyone wants to hold on to their money, but how much should they chase what's going on right now? Should they be fully invested, or should they take some of their profit when they see it go up every day? They're like, am I missing the boat on more substantial gains versus what I already made this year? How do I protect it? What's the risk reward there?
My answer to that would be, first of all, you always want to be in the market. And I think in 2017 going into 18, these markets are more liquid than they have ever been. And I laugh when people talk about this being analogous to 2007, because the leverage, and we talked about this weeks ago, the leverage in 2007 is nowhere near the leverage in 2017. The leverage is in the options market, which is a good thing, because that means you have controlled risk. So to me, until leverage gets out of control, Mike, you're not really looking at ringing the register. You're staying with something that's working because it can work way longer than you ever expected.
And Mike, I think the biggest point I would say is you got to educate yourself more into the derivatives market, into the options world. And the reason I say that is, forever I've talked about when volatility gets to a point, you have to protect yourself. That way you can still go to sleep at night and you can sleep well, knowing the fact that at a 9 volatility, which is where we are right now, the VIX for the S&P 500 is extremely low. That means, in other words, your insurance on your stocks is as cheap as it usually can get to. It could get a little cheper, but it's dang cheap right now, and you can be riding.
I don't do options.
To protect your portfolio.
That's a good point, though.
I'm worried. We don't talk about options on Mad Money because I'm concerned about the average guy and the misuse of them. And that by no means to denigrate the average guy. I think that you are on the field. A lot of the people I see are in the stands. And in the stands, people are never going to be as informed.
No question.
It's just not right. But as to your point, I'm in
Look at you working
camp.
all these sports metaphors. And I'm very
one after the other.
Is that what's in this big stack? You got a list of those?
Got a whole bunch right here on the screen.
We're taught like that. But I will say, I don't mind this idea. I'm looking, for instance, at a lot of these NASDAQ companies. And they've had very big runs. And, they're not moving. Why? Because they issue stock as quickly as the industrials take stock back. So I'm in the idea that there are things to sell. And we do catch downdrafts. And we would be foolish to think that at some point we are not going to get a couple % decline, and you can get into some of the ones that I think are much more attractive.
I think Mike is asking a different question, though. I think he's talking about asset allocation, not just what the market will do.
What percentage you would be invested now?
So let me.
If you're a guy that's invested, should you be 50% in? Should you be all in? Where should you be?
I think so. From a wealth management perspective, which is my day job, the way I would answer, and we get that question every single day, every day. The way to answer that question it's got to be a personal answer, because nobody really knows. So the last 2 years, you have 17% annualized returns to the S&P. Historically, that is not an aberration, but it's not probable And the idea that we're going to have another 2 years of 17% annual return, like nobody would look at the history of the market and say, yeah, it's very likely that's going to happen. So the answer has to be, how much money do I need to spend over the next 20 years? Let's hope 30, you know, but reasonably. What's my cost of living? What is my best shot at earning that return? And the answer cannot be just S&P 500 at current multiples. The answer's got to be emerging markets, got to be European stocks. You're paying less for the cash flow that those assets are going to deliver. But U.S. stocks should be part of the picture. So it's an allocation question, and it's a timing question.
There's not enough cash in that. If you're, look, I'm a big believer that we're all going to live longer. I hope that. Yeah, but I do know that there are a lot of people, in terms of knowing yourself. I mean, I'm a guy who says, listen, you can have 75% in stocks when you're 70 because of how long people live. But I am conscious of the fact that people don't hear the first thing you said, which is if you need the money.
Well,
if you need the money, and they have to understand that you are looking at
2-year money should not be in equities.
There you go.
No, you're 100% right.
Thank you.
I totally agree.
Can we just note also that the Nasdaq just crossed 7,000, and that goes directly to Mike's question. And I mean,
it's a runaway train.
Exactly. Right. I think, you know, with respect, I think some of your answers are trying to be a little too cute. I think that Jimmy is onto it in that you're asking simply, do you let it ride?
Let it ride.
Or do you
cash some of your chips?
Or do you cash some of your chips out?
I'm a cash some chips
in
guy. My mom used to gamble, okay? She loved gambling. And when she hit it, she said, let's take that money and go buy a cashmere sweater. There's nothing like cashmere. I am still in the cashmere camp.
But that's what we're saying. If you rebalance, you are cashing some chips.
No, I can give you an answer to your question.
I think I agree with Jimmy. Mr. and Mrs. America, by and large, are not well-versed on options, maybe.
Right.
They're not invested wholly through options.
Right.
They look at their statement. They look at the NASDAQ crossing 7,000 today, another high. They look at the Dow getting closer to 25,000 and say, oh, my God, is this thing going to really explode, or do I need to take some?
To Jimmy's point, we've had a rule in the options world, and then I'll get back to the stocks for you. So in the options world, if I have an option that doubles, I take half off. You know why? Because the rest of it now is money that's sitting there. I've already taken my money out, right? That is the discipline, and if it gets cut in half, I'm going to be out, right? I've said that millions of times over at that telestrader over there for you. But to answer your question a little more clearly, one of the best areas, Scott, we talk about this all the time, and this is, what's the management team? What's the valuation, and is there growth? You know which companies come into that? Intel. You look at the banks. You look at Microsoft. If you've got growth, and you've got a low PE, and you're buying back shares, and you're getting a dividend, and all of those things come together, and you like the management team, you own those stocks. You don't get rid of those.
You can have all those things in place and have a 20% correction in the market that doesn't negate any of those truths. You could say Intel's a great company in January of 2016. By mid-February, you're off 19% in the stock for no reason, just because that's how markets work. So Mike's asking, what do I do now? Stocks keep going up. I've made all this money.
You got to be fundamentally in the right areas.
You got to fight greed. I'm hearing way too much greed.
So it depends on your risk tolerance,
100%.
obviously. Let me ask the other question that everyone's asking. If you've missed the boat on this, and
what do you do now?
Is it too late to jump in? Am I going to get cut off at the knees, or can I still jump in this?
The only two answers to that is A, dollar cost average. Don't take everything that you have in cash and throw it at the. By the way, we are 10% above the 50-week moving average in the S&P. If anyone looks at a chart of what anyone looks at the plots, what that looks like, almost every instance is a pullback. That's how extended this rally's become.
That's what we have to worry about.
Dollar cost average.
I'll say this too.
Each month.
There is opportunity in this market almost every single day, and I'll give you a couple of examples. If Wells Fargo gets sold off for the wrong reasons, great opportunity. Best Buy for the right, if they've got growth in the right spots, and you can go through a whole list. Home Depot 2 quarters ago got sold off a great number. That's an opportunity in a market that's been going straight up. That gives you the opportunity to get it.
But do you think we're too granular? I mean, do you want to?
I don't think there's not an absolute answer. That's the problem.
When a guy comes in, he wants to invest. He's not in the market. He wants to get in. And what does he do?
Small start. Get a truck. Be ready.
Add over time and be optimistic.
Every week, put money into the market.
But optimism is what's key. Now, you are iconic and ironic. When you listen to us, do you feel, what an irony? Where are these guys now? Where were they, in 2008?
I watch you every day, so I've watched you as you come along. Listen, things change. This thing changes day to day. It's like what we do in sports. It's every day's a new day for you guys.
Right.
That's it. You don't know.
That's right.
Something could happen tonight. You know, something could happen around the world tonight.
That's right.
And your market could be down 20% tomorrow.
I'm worried about.
And we could change our mind
Any
in
given
6
night.
hours.
You got to
It's
be
Sunday.
flexible.
Absolutely.
And you have to be able to move.
Any given Thursday, any given Monday night, well, you know,
It is a perfect segue to our next conversation because our All-America survey is showing record levels of optimism and participation in this stock market. CNBC senior economics reporter Steve Leisman has the numbers. Steve?
Yeah, Scott, thanks very much. Really buoyant attitudes of the public, the general public, by the way, when it comes to the stock market. For the first time in the 10 or 11 years we've been doing this survey, 50% of the public says now is a good time to invest. You can see what's happened. The percentage who say it's a bad time down to 29%. Let's go all the way back through the boom market. We had it here. They didn't cotton to the stock market. Now they're cottoning to the stock market. Let's look at attitudes towards the stock market by portfolio size. Those with no investment, just 31% say now is a good time. A little less than $50,000 in stocks, 61%. Those with the most money in stocks are the most buoyant. But when I look at the change, folks, the biggest change is right in here in the middle. And then another record to tell you about. We averaged this for the 4 quarters, 53.5, call it 54% of the public now owning stocks. That's up a couple points in a year. And those, by the way, who favor the GOP tax bill, 70% say it's a good time to invest, whereas 43% who oppose it say it's a good time to invest. All of this taking place in context of much better attitudes on the economy. Again, for the first time, 51% saying now the economy is good or excellent. 41%, this is a second or third record here, saying that the outlook for the economy is good. And that's the context for the stock market. And Scott, of course, being on with you and Josh and Joe is great, but being on with Mike, first time, long time, man. That's all I can tell you.
So Steve,
first time, long time.
Steve, that
Can I break his
data.
heart now? I don't agree with anything he said.
Steve, that data illustrates why retail investors over time kill themselves in this game. That is every single bias. If you read Kahneman, that is every single bias that works against us. The higher the stock market goes, the more people are optimistic about it.
Yeah.
So that's called the recency bias,
right?
Where we look at what's right now. Everyone thinks the Patriots are invincible forever. You know, it's the same kind of thing. Then you take a look.
The Giants can't do anything forever, right?
Then you take a look at the availability bias. So the information that is the most easy to recall right now is the information that we weight the most. I can run down a list of 20 of these things. People should be optimistic when no one else is, but of course,
one other thing I want to add to that, what bothers me is when people make decisions based on politics, because people, for political reasons, we saw sat out the earlier bull market, and now they're in. When we separate it by party, Scott, Josh, we find people that are much more into it because they're Republicans versus Democrats. That's working now, but it didn't work back then, and they missed that first round.
Well, they said George W. Bush was the business president. He has an MBA. He ran corporations. We had a lost decade for the S&P. Nobody made any money. Obama was anti-business. S&P triples. There are so many other variables that come in that who's the president or what's the Congress makeup. It's probably the worst thing that you can pick other than astrology to make like asset allocation decisions.
In different circles, but I can tell you, back in the dot-com days, wherever you went, everybody talked about stocks. That's all they talked about. Now, I don't ever go anywhere where people talk about stocks. So I don't think it's overly exuberant now. Except now Bitcoin is different. They just ask what it is more than anything else. I don't think they're invested, but people haven't jumped into this market the way they did back in the
exuberance is not there, and I think you're asking an interesting look. All 4 of us here, we know who we are. I know my roots, who I am. Jimmy's roots were as a trader, if I'm correct. Hedge fund. Pete, his roots were as a trader. Josh, wealth manager. I was a trader. So I think the question you have to ask yourself is, what does Mike want out of the market, and what do you want to be? Do you want to be a long-term investor, or do you want to be a trader?
No, I don't want to be a long-term investor. I just think you don't want to get in at the top. That's what you're really afraid of. And right now, you look at it, and every day you feel like you missed the boat.
Does, Jimmy, the information that Leisman just gave you make you more optimistic about where we are?
I'm confused about all these surveys and the money that's on the sidelines. I mean, it's supposed to be record amount on the sidelines. I still see a lot of people in CDs. I still see a lot of people who are just earning the cash rate because they're scared.
Yeah.
And I think the way to deal with scared is to start small. For those of us, my daughter, uniform gift to minors, okay? 26, all right? Now, how much should she be in stock? The answer is all. But when someone's just now past uniform gift, but I'm still controlling it, we'll talk to her about it tonight. But I do believe that the average person who has, say, 10 to 20%, that person has to wait for a decline. And I'm not talking about a big decline. I'm talking about a decline of even 3 to 4% so that they don't feel like they came in at the top and then they want to leave.
I don't really think that as many people are out of the market as some people are saying. Like, I think
you don't
people...
think so?
No, here's how I see it. Mike made the really important point. It felt like fun. In 2000, it was the national pastime. It was what you did.
Yes.
But it was a trading market.
Wait, hold on.
Just picking letters.
Hold on.
I know. Right.
What people are doing now, if you look at 401k balances, trillions and trillions of dollars coming in, they are flush. Everyone's investing, but they're not enjoying it. They're doing it. They're in the missionary position. It's ETFs. It's Vanguard. All the flows are going up.
That's not a reference to.
Well,
never mind.
He's a chart guy.
I'm just saying. Yeah, it's a chart formation. No one is fetishizing NVIDIA. Look at the gains in the stock. It's bigger than what happened at .com.
NVIDIA, isn't that a fetish?
It's a different market.
People aren't talking about it on the street corner. Mike makes the most important point.
No one knows my dog's name is NVIDIA, and that's incredible to me. I say, hey, NVIDIA, come here, come here. People don't look at me. They think, wow, it's straight.
They don't even know what it means.
Ask you this.
Yeah.
If NASDAQ 7,000, let's call, it's close to Dow 25,000, if that's not euphoria, and I'm not saying it is, what is euphoria going to look like?
Euphoria is going to look like when
since we're talking about what 2000 was, and this, even though we keep going, doesn't feel like it.
No, it doesn't feel like it. I stood on the trading floor.
What's it going to look like?
I stood on the trading floor when Cisco was trading at a couple hundred PE.
Absolutely.
I mean, that's what those things look like. This is a different market altogether. That's why every time somebody wanted to compare the NASDAQ, it was not something you could actually compare.
Euphoria is happening in San Francisco when Uber is worth $70 billion. WeWork's worth $20 billion in owning buildings. The euphoria is happening away from mom and pop. Mom and pop have been excluded from it to their detriment so far, but if that blows up, and that's where the real nut job valuations are, I don't think mom and pop get hurt.
The key is this: know who you are. And if you know you're a trader, I'm still a trader. But I've got, if you look at my portfolio right now, Scott, and you look at the stocks that I have versus the options that I have, it's almost dead heat. I've gotten a little bit older. I'm getting close to my middle 50s. I'm still a trader, but I also still have found stocks that unless something dramatic changes, I've owned Apple forever. I've owned, Microsoft since Satya came in there. There are names that I'm willing to hold on to now for extended period of times, even though I'm a trader. And some of these are 5, 10, 15, 20-year type things. So you have to know who you are and where you are.
Scott, it is amazing. There was a time in 2000 where I didn't want to go to a ball game. Why? Because people would say, hey, what do you think about Akamai, which we'll talk about? How about America Online? I mean, yesterday I'm at the Eagles-Giants game, and no one asked me about a stock. No one. People wanted to ask me about Foles. I mean, like, at one time, Foles, I would, try to hit it up. F-O-L-E doesn't come out. It's amazing how it is. It's irrelevant. They're irrelevant. And before, it'd be
Foles was reduced to the pink sheets. Now he's like
Foles now trades. He trades on the NASDAQ, and he rang the opening bell this morning.
And back then, everyone was trading, Jim. 99, everyone was trading. They were doing themselves. Qualcomm on earnings would go from 450 to 550.
Now the money goes to iShares and Vanguard.
Let's focus on taxes for a moment. The House could vote as early as tomorrow on the tax bill, would be followed by the Senate. Ilan Moy live in Washington on what to expect over the next couple of days from a calendar standpoint. Ilan?
Scott, it looks like Republicans do have this locked down. We're hearing that the House will probably vote early tomorrow afternoon, though, of course, that timeline is fluid. The Senate could also start its process, which takes a little bit longer. That could begin as early as tomorrow as well. Now, Republicans in the Senate do appear to have enough votes to pass this, even without John McCain. He is back in Arizona after spending several days last week in the hospital for the side effects of his cancer treatment. And he just recently tweeted, "Thanks to everyone for your support and words of encouragement. I'm feeling well and looking forward to returning to work after the holidays." Now, another senator who's been battling some health issues is Thad Cochran. Now, he is in Washington, and he does plan to be here to vote for the tax bill. And we still don't have confirmed positions for a handful of senators who have been on the fence. Senator Flake's office tells us that he is still undecided Also, Mike Lee, he worked with Senator Marco Rubio to expand the child tax credit. He tweeted that increase was a big win, but he's still reading the final bill and will hopefully vote for it. And meanwhile, Susan Collins applauded several changes to this legislation, including expanding that deduction for state and local taxes, along with medical expenses, and getting rid of that first in, first out provision that had been in the Senate version as well. So, Scott, they sound supportive. And just to give you an idea of how confident the White House is, they are still hoping to sign this bill into law before the end of the week. Back over to you.
See how it all plays out. Elon, thank you so much. Well, we're just getting started here. Here's what else is coming up on the halftime report.
They're going to break.
Tweet storm. The stock is jumping big time today after one analyst says it's time to pile in. The call of the day is next. Before the break, our data partners at Kensho say buy Europe after the Euro Stoxx 50 underperforms the S&P for the year. The halftime report with Scott Wapner and the traders is back in 2 minutes.
Herrera. Mike, if you were on the air today, I'm sure you'd be addressing the Skipper thing. Yeah. What do you make of that? What's been going on at ESPN?
Well, I mean, they're two different things, but Skipper's, issues are his own. I mean, I wish him well. I've had a lot of battles with ESPN through the years, but things have changed tremendously for ESPN. They once were the most powerful entity in the history of television sports because they had an advantage that no one else did. They got paid per month and were able to sell spots. So were able to double dip and had an amazing war chest to go after anything. There was a time they could have owned everything. That day's over. You're completely having different viewing patterns. Everyone is breaking the way they did it. Cable's dead. You know that. So they will never be the powerful force. They'll just be a regular player now, but they'll never be the force they were ever again.
Do you think that there ultimately will be some pressure on rights fees? I mean, we know the sort of problems, right? They paid a lot of money for a lot of the properties that they have.
I think the leagues know that their future is with Apple and Google and Amazon, and they have all the money, and that's where they will go. And the way we distribute it will be, it's about the signal. Where you watch, it's up to you. You can watch it on a little screen, you can watch it on a huge screen, but it's going to still be, the rights fees will still be enormous for sports because it's live and it's unscripted. It's the most important content that you can have on television. So it will always draw enormous amounts of money.
Yeah, well, Twitter among the companies doing deals in the big league. Yep, you want to talk before we move on? Yeah.
One of the things, I go out west 4 times a year. Do you know, Mike, these people with these companies like Facebook and Alpha, they don't follow sports. I literally think that's the reason why they haven't gotten in yet. When you try to talk to them about sports, they look at you like you're some sort of dummy.
They haven't needed it, but it's going to happen. Amazon and those guys, Google, they're going to get involved. They'll be involved. They'll bid next time around for the NFL.
The guy who's in charge of all of the TV and media efforts for Apple is Eddie Q. Yes. He's got courtside seats at the Warriors.
I know.
He cares about sports.
It will happen. Well, it's the best content there is because it's live and unscripted, and you can't get that anywhere. It's going to happen.
And Anthony Noto knew that, which is one of the reasons why we segued to Twitter. Mm-hmm. Anthony Noto was the first guy to tell me, listen, we're going to
that Twitter chart up today
on Twitter. Now, why? Because he played football at Army.
Yep.
Okay. He worked for the NFL, and he's actually in the stock business. And that's what they need more of out there.
So Twitter is our call of the day, right? Mm-hmm. J.P. Morgan upgrades it today to overweight. The stocks exploded recently, and I don't know why.
Shortage. What else are we going to do? And it finally came out. I mean, I remember when Anthony said to me, listen, I'll make a bet with you. I bet you Snap crosses Twitter on the way down. We don't have that many winners in social media, and I think the door's closing. I don't think you can start up a social media. We used to think that Twitter was going to be MySpace. Come on, the president has disintermediated all of us by using Twitter, and none of these upgrades, including Doug's excellent one, do we ever talk about the fact that politicians have used this thing in order to reach people? It's working.
I said when they reported earnings last time, and the stock had run up into earnings and fell off a little bit, and I've been, full disclosure, I added more Twitter last week, but I said, so now they've returned to MAU growth, and now they're forecasting this coming year will be the first full year of GAAP profitability. So if they're not going away, then they force the street to pay attention to them. If they were going to fade into oblivion like Groupon and Zynga and all these other things, then that's a different story. But if they're not going away and growth has resumed on all the important metrics, then you're forced to pay attention to the fact that they haven't disappeared. And I also have said, and I still think this, that advertising firms don't want the duopoly. They don't love this idea that they can only go to Google or Facebook to reach 85% of the web. So if Snap and Twitter are going to be real alternatives, advertisers would prefer to spread their bets rather than be beholden. Everyone knows that in every vertical. So I think Twitter, for that reason, deserves our attention.
So, I mean, whereas people were buying the stock because they thought maybe it was a takeout candidate,
are people
now buying it on fundamentals?
I think so. But
Fundamental improvement?
Mike, let me come to you. One of the great things about your show is ordinary people call. Okay, and you're tough on ordinary people. It's okay. Twitter is ordinary people being tough on us. At what point do the people who get tweeted at and harassed just say, the hell with it, I'm not going there?
Everyone goes there, though. Twitter in our business or in the business.
The athletes are all on there.
Everybody uses it.
Yep.
Every athlete uses it. You just have to be able to weed out what's real, what's not. I mean, everything is fake stuff. There's like 14 fake stuff, different categories for me there, but different ones have businesses there. But from the standpoint of this, I always felt this stock was the worst run stock in America because they should be indispensable. In sports and in business, people would pay anything a month for Twitter because you need it, because everybody follows it every minute of the day. So it's like a running 24-hour just news stream of information.
What they couldn't figure out.
You don't own it, right? You don't own it.
I'm not on it. I'm a Twitter subject. I don't ever go on Twitter.
I think what they did wrong, and they've now really come a long way to fixing, to your point, they never made money with this, and Facebook's making all this money. The big difference is on Facebook, most people are themselves, and they have a lot of personal information on there. Yeah. Twitter is like hit and run stuff, and it turned people off. So today, they just instituted for the first time rules where Twitter will kick you off based on your activities off of the site. So if you're a neo-Nazi and you're involved in some of these hate groups or terror groups, Twitter will look at that and decide that you can't be on their platform.
That costs money, though, for them. How do they do it?
But you know what? What is the cost? What is the cost of Kim Kardashian saying, I will no longer post there, it's all filth, being directed at me? Or LeBron James, or whatever.
They allowed the fake accounts, though. They allowed there to be like 10 fake accounts in my name, and everybody's had that. Right. And then there's so much nonsense on there. But let me say this. Our producers are on there all day. They follow it all day. It's a running thing.
Monzo's all over it.
My producer's on there all day. I'm not, but he is. You get
where everything's happening.
Information there.
Can you buy this? Can you buy the stock today?
Yes, I still think you can.
The story's really changed.
On this. Here's a real backlash.
The story's changed.
I'm buying some fabulous meat for the holiday for a buddy of mine. A kangaroo. I got python. I've got bison. I got all these things that you never thought about eating, right? And I take a picture of it at Paisanos.
Maybe for a good
Paisanos in Brooklyn. And my wife grabs the phone. She goes, enough. Can't you just enjoy life and be in the present? And I said, listen, I'm completely mindful. This is ridiculous. Why am I attacked for? I'm mindful as all get out. So I think that there is going to be some sort of compromise.
Oh, my God.
Social media is having no impact on the social fabric. I'm just saying.
You got to be able to take it.
I know.
There's one more element to why you can buy this stock. Last week, we talked about this. I bought the stock, and the reason is this has not been a quant name at all.
No, they don't want
in the last 2 years.
There's no earnings.
This is now a quant name because it's developing the momentum, and the first time the quants can see that, and you're seeing the quants come in.
Roku, someone's in my ear. That's why I'm calling you Roku.
But seriously, Mike's not in the stock. Mike's not on Twitter. Mike doesn't even own the stock. Should he be in the stock today?
Look, I think that Facebook is a better.
There's a lot of Mikes out there who said this thing was the worst thing
ever. There's not 330 million people on Twitter.
Who are now looking at 30% in 3 months, saying, okay, maybe the story's changed.
Just keep track of this. There's not 330 million people on Twitter.
Market cap of Facebook is 500 billion, though.
But the problem with Twitter is
network that you pay.
To Mike's point, though.
Do it for free for them.
So to Mike's point is this. There's at least 30% or more fake accounts on Twitter. Just think about that for a moment in terms of when you see growth and all the rest of this. At least 30% have got to be fake.
Facebook?
No, on Twitter.
No, I'm saying Facebook. None.
Right.
Have you guys ordered anything on Facebook without even realizing it? They had these blankets. I was looking at my wife's Twitch. She is in this thing called, what would Virginia Woolf do? I mean, I don't know what Virginia Woolf would do, but she ordered a lot of oil of Olay and heavy blankets. I mean, they put the ads in. They're brilliant. What would Virginia Woolf do? They wrinkle cream.
What would Virginia Woolf do? I haven't thought about that much.
Surprises me.
All right. Up next, Pete follows bullish options moves in a teen retailer. It's up almost 20% in a month. Oh, boy. Halftime report's back in 2 minutes. We are back on the halftime report. John and Pete are tracking unusual options activity at the telestrator for us. Guys, what do you see today, Pete?
Well, I got Jim with me, actually, just so you know. I know he looks a lot like John. I'm just saying.
Leisman doesn't mention it. That's it. I'm NVIDIA, period. I'm changing my dog's name to my name.
Scott, we don't talk with retailers very often. Everybody talks about this being an Amazon world. Let me just point this out. Target's up over 10% in the last month. Best Buy's up 16%. Home Depot's up 16%. Gives you a little idea. Retail's not getting killed by Amazon, even though the world wants to tell you they are. Here's another name, American Eagle. Take a look at this. You can see this chart. This is when all of retail was basically getting bashed. Then it started to make this huge move since November. I think this thing is ready to break out. The options are telling me the same exact thing. The May 20, so they're going all the way out to May, Jimmy, buying a little bit of time. 10,200 of these were bought for about $1. So pretty aggressive. This is not a name that comes up very often for us. We don't get a lot of retail names. We get some once in a while. A lot of people like to dabble in names like, Macy's and some of these other ones. But American Eagle, fundamental balance sheet, unbelievable.
And
the buybacks and Survivor with some yield
and
as well.
I think people have to recognize, like Children's Place, when you get the Survivor, people buy there. And by the way, when you go into this place, the stuff is not expensive, okay? They're in good position in the mall. And remember, Gap is a fraction of the mindset of millennials that American Eagle is. I'm a buyer. I think you've got a great one here.
Jimmy, let me ask you quickly, has this turn in retail that we've seen recently, is it anything more than seasonal?
Well, look, it got cold. I keep thinking about what Macy's been telling me and what Manny Trico and PVH is telling me. There's people who have jobs. There are people who want to spend. People are going out. And you know what? This is a changed place. Right. Our country's got a level of optimism that I just love. And when we're optimistic in this country, what do? We shop.
We shop.
And by the way, real quick, brands are so important because brands make you. Target, part of the reason I think that this stock has actually been moving it lately has been the fact that within the stores, their own brands, Scott, that's been something big.
Jack.
These guys, by the way, this last chart when we had American Eagle up there, they have a lingerie brand that is absolutely growing off the charts, and that's killing it right now.
How about L Brands? Can they come back?
They got competition finally.
Yes, they do.
Absolutely.
But thank you for calling me Jimmy.
Yeah.
Scott, that was great. You didn't call me John. You didn't call me nothing. And don't call me late for dinner.
Come on back over here. I'm calling you over here. I want to go through your portfolio a little bit, Mike. How long have you owned Amazon?
Long time. Years.
Apple?
Even longer. Very long time. But I've added a lot. I like Apple a lot going forward. Amazon, I think the only thing that could stop them is the Justice Department. Apple amazes me in that the store's always packed and my kids always want to go there. Plus, it's the only place where no one cares what the price of anything is Apple. So to me, that's an amazing quality they have. And then NVIDIA, which to me is my other those three are my biggest by far.
By far, okay.
Yeah, and that has a technological moat that I believe that going forward. So those are my three biggest. I have a lot after that, but that you could put in and out, but those three are by far the biggest.
We joke a lot about NVIDIA for obvious reasons with Jim here and dog's name and all that. What should people do with NVIDIA?
Well, look, the technological mode is exactly right because what happened is they have the better chip, better artificial intelligence chip, better data center chip. And, Take-Two Interactive, one of my absolute favorite companies, Strauss Zelnick, who runs it, they actually held back Red Dead Redemption, which the real junkies know is the great game. They wanted it to be on the NVIDIA chip. Now, I know AMD has got competitors, but NVIDIA is where Intel was in 93, 94. And I just think that people do not understand how brilliant Jensen Huang is. He's the Andy Grove of this generation. He's that good.
It's more than the chip. It's the CUDA software. The whole world that's going to do AI is standardizing the equivalent of Windows to your portfolio.
Artificial intelligence is going to be enormous.
If you're working in that area, you're using their software too.
I don't think the car is going to be as big as everybody thinks. I think that's going to take a long time before anybody lets everybody's car to go with no driver. I just don't even think I want to see how they're going to insure things. I don't even think it's possible.
How do you think that's going to work on the LIE?
I don't think it's going to work at all.
How about weather conditions?
I don't believe that. Yeah, that whole
the LIE not bad in the city.
I just think
the car has to choose between
Let's get a thought on another stock. Salesforce.
Like Salesforce a lot. I just think it's underrated. I think it could go up a lot. And I also like Vail Resorts. I've been to Beaver Creek. I like their company, and Mountain is a company. MTN is a company that I like a lot too going forward.
Most experiential company. and the Vail, and then the cruise lines. This is where people go to rebrand themselves. My daughter went out west.
The Creek's unbelievable.
Yeah, she wanted. She wanted to rebrand, so she went to the different canyons around America. People thought that she was someone who was delicate. I mean, she's rappelling down cliffs. Talk about a rebrand. That's what you have to do when on Instagram. Well, you guys are laughing. On Instagram, you can. I mean, some of these guys are lonely, admittedly, but Insta desperados. But I am totally with you on Salesforce. Mark Benioff is a visionary. The stock has got,
I've seen him on your show about 100 times.
About 107.
Yeah.
But Benioff, by the way, can I just say, because I know you care about this, Benioff Children's Hospitals, 2 of them. He's done more to help children in this country.
Very nice.
That, I don't want to say God because that's not fair, but he is God-given in the sense that what he wants to do is help children.
All right.
And I love that.
We want to make Mike feel even more comfortable today, so we thought we'd take some of your phone calls to do
nice.
that. Love it. First up is Taylor. Let's listen.
Hey, Taylor here from Florida. First-time caller, long-time listener. I have a question about the semis. Is the momentum over, or is it truly different this time when we're looking at some secular growth in these stocks, particularly Micron?
Good call from Taylor, just given what's going on with the chips lately.
Go ahead, guys. You guys. NVIDIA is my only chip, so you guys take it.
Micron's about to report, and I think that the price earnings multiple is low, but that's also actually not a good sign. Yeah. They've got flash that is actually rolling over a little bit, but they have DRAMs that are good. They have the opportunity. This is a call option play.
Yes,
which one would you do?
I would want to do just out of the money calls.
Ooh,
Give yourself a great opportunity if this thing explodes to the upside. Intel, by the way, hitting new highs. So the chip space isn't dead. It's very selective, but it's not dead by any means.
Hey, Josh, let me give you one that I think is really hard, and I've done terribly with, is trying to figure out energy. Every time I get involved in energy, I get killed. So every time I've tried to get in, buy these oil stocks, I've gotten murdered. Stop doing it.
Yeah, I
can never figure out the energy part of it.
I think that's fossil fuel going away.
There's going to be survivors. So you need to see consolidation. And there's names like Concho Energy. There's names like Diamondback. There's names like Pioneer, Enron to a certain extent. They'll be the survivors of a much-needed consolidation in shale.
It's a commodity, so it's booms and busts.
Yeah.
You pay a higher price during the boom, but you have a higher likelihood that the stock doesn't kill you.
Mass limited partnerships are finally moving, and that's good for income for people.
What about the idea that Gundlach was telling me last week when I was in L.A. buy commodities? Given what's going on in the global
economy. I see Freeport breaking out.
But that's a hard trade for
He expects
metals. He was talking metals.
But partly a dollar play, too. He expects the dollar, after moving a little bit higher, to really have a move lower.
I got an important question, though. How was Taylor as a questioner? Because I know that there are people who call in and they should be...
I'd say very weak. I need more passion than that out of that call. You know?
That's what I... See, I mean, it was a sleeper call, right? I mean, when you next, right?
I need him back like you.
She's got to disagree. He's got to be...
Hello?
I have to be as nuts as you are.
Taylor in Florida. Well, what do you think of the, the chips?
We have a question on Verizon. Let's see how this caller does.
Jeff Strauss, Manhattan Beach, California. What do you guys think about Verizon, the near-term price prediction with the great dividends, the tax reform, and net neutrality in the news?
All right, Jimmy, give me VZ.
I'm sorry, I was out of line with that.
I would have hung up on him.
I like VZ because I like income. But, next. Is that what we'd say? Where's Monzo on this?
Get lost.
Would Monzo let that call go through?
He would, but I'd get rid of it.
This is hallowed ground we're next to. Don't go to Verizon. Hey, what do you think about the 30-year treasury, Mike? Do you like the treasury? I'm sorry.
Give me a quick one on Verizon.
Verizon, actually, I like the income.
Jeff called in.
I like the income, and I don't mean to be mean to Jeff. I worship
buy
you.
CBS?
I think they should, but I don't think they will.
Somebody should.
Yes, they should, because the market cap's too small. But Les doesn't want to sell.
Good company, too. Good company.
Yes, Les. Yes.
Let him run it. He's smart.
All right.
I didn't mean to make fun of either Taylor or Jeff. They're both great guys, and they can call on 1-800-743-CNBC tonight.
Okay.
Yeah.
You'll get him in?
Yeah, I'll get him.
Okay, good. There you go. Jeff, do that. All right, straight ahead on half. We're going to do final trades from the desk, including Jim Cramer and Mike Francesa as well. All right, we're back on the halftime report. Jimmy, what's coming up tonight?
Well, I got Mike Nealon, your United Rentals, URI. The stock is hot as a pistol. At Ollie's Bargain Store, Mr. Butler. I know that sounds boring, but one time Walmart was only in Arkansas.
We'll look forward to that tonight, 6 p.m. Good stuff. Let's talk sports for a second. The ending of the Pats-Steelers game, right? They got the call right, but the rule's stupid.
The rule's terrible. It's got to change, but you got to remember now, if you go to extend the football, as you saw again, you saw it with Des Bryant, you saw it yesterday, you have got to make sure you control the ball when you go to the ground. If it moves, if it rolls, you're going to lose it. The call was proper by what they consider a catch, which is a terrible rule. They should change it. We've seen too much of that this year. You saw last night again when Carr extended the ball and wound up losing it through the end zone. But at the end of this game, what was unbelievable was, first of all, that a shallow cross allowed the Pats to go from their own 20. The Steelers go from the 20 all the way down to inside the 10, which was such terrible defense. But the other part is, once the second play happened and they came to the line to spike, he yells spike and then changes his mind. If you notice, when they say spike, the other receivers, they don't move. They stand still because they don't want to be offsides. One receiver broke. For him to go to the middle of the field there was a terrible move. If you want to go in the corner and throw it where it's either caught or out of bounds, fine. To go in the middle where it could get tipped was a disaster. That whole thing, once they're scrambled, he should have just spiked it and taken a field goal. But he didn't because Brady's on the other side. That's the reason why he didn't.
I figure you probably talked about the commissioner and his new deal recently. So he got his money.
Right.
He probably emerges a little bit dinged from the whole process.
He's more than
okay, so if I was going to, well, give me your thoughts on that. Then I was going to say
I think he's been, first of all, he's a pit bull. He's great against the players. He's great in court. He's good with the networks. From a public relations standpoint, he's the worst commissioner in the history of sports. And he is a guy that you cannot argue with. It's his way or the highway. He is a humorless guy who's a bully. And I think he's done a terrible job.
He's done a decent job for the owners, though.
Great job for the owners.
Isn't that? And that's his job at the end of the day.
That is his job. He works for the owners. But as far as being the face of the NFL, and with the fans and the players, they detest him. And I think that's the hard part. The owners love him. The fans and the players can't stand him.
Who's the Amazon then of the commissioner's set? Who would you place your bets with? The most.
Who's the best of the commissioners?
Who do you think?
I think Adam Silver is the guy who forward thinking is going to be the smartest as gambling comes forward, which is going to happen next 5 to 10 years. I think he's the most progressive of the commissioners.
Can you believe where valuations of the NBA have gone?
I think owning franchises, there was a lot of time where you could buy a ton of franchises in the NBA, in hockey. Franchises now are worth a fortune. It's a nice way to triple your money in a couple of years and 10 times your money in 10 years.
When are you going to tell the world what you're doing next? When can you do that?
I can't until at least the middle of next month, maybe even a little longer, but it's going to at least be a month.
Okay. We'll look forward to that for sure.
My pleasure. And it was, thanks for having me, guys, because I love watching you every day, and it's nice to be here.
It's been an absolute thrill
really,
for us, and I hope for our viewers as well.
Really, a thrill for me to be here with you guys. I'm a big fan. I watch you guys every day, and you guys have made me a lot of money.
So I actually got you a retirement present for 30 years of...
Frangelica.
Very nice.
Frangelica.
Give Jimmy a reality check on his Eagles. Can they do it with Foles, or are they hurting now?
You know, the way you got a changing of the guard in the NFC. You have the Rams instead of the Seahawks. You have the Vikings instead of the Packers. You have a very different NFC, and you have some young and experienced quarterbacks. So it's a year where it's wide open in the NFC. It's Pittsburgh and New England in the AFC. It's wide open in the NFC.
Yep. Wow. Albemarle, you still own that? ALB?
Yes, I do. Yes, thanks to him and Schwab too.
What a nice
Schwab
play.
Too.
I would stick with both.
Yeah,
I would stick with both.
All right. I wanted to remember to ask you about that because you said you bought it because of Josh's recommendation.
I did, and Schwab too. I bought Schwab around 40. It's about what, 50, 51, something.
Yeah, 50, 51, 52.
Yeah,
I think it's got room. I like both
and
for
he moves
next
the
year.
market every day. It's amazing. I watch afterwards. He moves the market. As for you, well, heck with you.
All right, let's do some final trades. We got about a minute and a half, 90 seconds or so. Joe, go ahead.
Marriott up to 133. I'm staying with it. Might even buy more.
You like that call?
Very much so. I love that group, too. I like Wyndham.
Okay. Josh Brown.
Twitter's up a lot. It is a temptation to want to take it off. It's gone up in the last couple of weeks substantially. I am not selling any. I added to it, and I'm going to let it ride.
You know, we were talking about Jeff Gunlock last week being on the show. Yeah. I got to tell you, Freeport McMoran's a name I love. I was in it. I just took it off on Friday. I plan on getting back in again, and I want to roll up and out. So I'm going to the January options to give me a little bit of time.
All right, Jim Cramer.
Look, Akamai's not done. I mean, I think Elliott does fabulous work. I think Cisco should buy Akamai. I think that Microsoft should buy it. I think that Google has to kick the tires. This is a fantastic network that has just been fallow. One of the worst performing stocks out there. Buy.
We gave you a final trade, too, I think.
Yeah, you did. And I took the bread and butter one. I think Apple's going to have a great next 6 months. I think it's going to really have a big run.
Well, this is their holiday season. This is when they make a lot of dough. NASDAQ, 7,000, Jim.
What can I say? I mean, I don't want to be so cliche as to say winners win, but there was Brady and there's the NASDAQ.
It's really been a stunning rise for what the NASDAQ has done this year, and it sounds like you guys think it's doing it.
It's doing it with rapid earnings and revenue growth.
Yes,
that's so important to point out.
All right, thank you, and thank you so much again.
My pleasure, really. Thank you, guys.
Thank you, Mike.
All right, Mike. The great Mike Francesa. Power Lunch starts right now.